Hi, and welcome to this episode of the Insurance Experts. My name is Marc Glickman. I'm an actuary by background, and it's my pleasure today to have on Ray Voelkle. Ray is a long-term care insurance specialist, and today we're going to talk about the rate stability regulations in long-term care. Thanks so much, Ray, for joining us today.
Thank you, Mark, for having me. Appreciate it.
So not everyone gets into the long-term care business, and I know you specialize in it. Tell me a little bit about how you got into this career.
Sales background, and I just felt that when I first was introduced to this product, it just felt comfortable to me because I knew I'd be able to offer people a way to relieve the burden of long-term care. I see it so much around me today, and I know if I do, everybody else is seeing it as well.
So how long have you been in the business for?
20 years.
Wow. And I know you had mentioned that you also had a personal story. Can you tell us a little bit about how long-term care has affected your family?
Yes, my grandmother needed long-term care, and my parents put her in a nursing home, and there she went through all of her money, and which she had earmarked for other things like handing down to grandchildren and what have you. But she wound up using all of her money, and we didn't know anything at that point about long-term care insurance. All we could do is watch her use her money, and it got to the point where she ran out and she had to rely on Medicaid. So she spent her final years on Medicaid, and it was a sad story. And I didn't want to see that happen to anybody else, but I didn't know the answer to the problem.
Yeah.
Until I was introduced to long-term care insurance.
So, and I know today, of course, it's not just nursing homes, right? It covers home health care and assisted living facilities, but it's almost an epidemic. There are more people out there that need long-term care than ever before.
That's right. More than ever. In fact, if you read the statistics, they might scare you, but they say that after a person reaches age 65, there's about a 70% chance that they'll need some long-term care in their remaining years.
Yeah. So, what do you think is the number one reason that people don't look at buying long-term care insurance these days? Because obviously you're talking to them every day.
Well, I think it's preconceived that the cost of long-term care insurance is expensive. And with that in mind, there's been some stories about rate increases on the market. So a lot of people are a little hesitant about moving forward because of rate increases.
Yep. And I know today we want to talk a little bit about the regulations around long-term care and rate increases a little bit. Prior to between 2002 and 2006, they had a different regulation structure. And today they have something called rate stability regulations in most states. Tell me a little bit about your thoughts about how that has impacted the market in terms of today's outlook for rate stability.
Well, I think number one, it eases the mind knowing that there's some protection against rate increases in the future. And the studies that I've seen, I don't know if you want to get into this.
Yeah, no, go ahead and tell us a little bit about it.
The data that I've read shows the rate increase history prior to the regulation enacted, and then the data that shows rate increases after. So it's clear to me that the rate stability is working. The regulation is working.
Yeah, and I want to be clear that it doesn't prevent a company from doing a rate increase, but it imposes higher standards for the regulators to approve it, and more certainty around when they're pricing it initially, that they're adding in extra conservatism to the pricing. So it's just a different structure, and it's going to have a different profile on these products going forward, right?
That's correct. Yeah.
So I know that you had recently worked with a client, and as we hear about out there, sometimes they bought the policy maybe 20 years ago, and they get a rate increase notice. Can you tell us a little bit about that client and how they came to you?
Well, this particular client, married couple, both same age, 70. They bought the policy 20 years ago, and they felt they had the best plan that was available on the market. And in reviewing the plan, I felt that it was too. It was a great plan, maybe a little overinsured, but that's what a lot of people did 20 years ago. And his increases have added up to over 70% of what he initially paid.
Mm-hmm.
But his policy was not protected against the rate stability regulation because his policy was purchased prior to the state of North Carolina adopting that regulation.
Right. And so we hear about that, 70%, being a rate increase. But on the benefit side, it sounds like that they actually had one of the richest policies available back then, which probably means that it's richer than a lot of the policies even today.
It is. It is, most definitely. And what he needs, he's in the process of evaluating what he should do, whether to reduce benefits to offset the premium increase or to replace the policy. My advice to him is consider those options that they're giving you in reducing benefits to offset that premium increase. He still has a great policy with any of the options that they're offering.
Yeah, and I've looked at this and I've done a study, and 70% of people actually keep the policy and actually pay the extra premium, because when you look at the amount of benefits you have relative to that premium, still a spectacular value. 25% reduced benefits, and only a few percent of people actually lapse or replace their policy. And the reason they don't do that is because it actually is quite a good deal. You just have to take it in context for what you originally got.
Yeah, that's right.
Now, in terms of the new policies, when you think about it, you're still getting very good value from the new policies. It's just they're creating a structure that's not going to have as volatile pricing. Have you kind of had that conversation with clients, with rate stability? How have they responded to you about, what you show them today?
Well, I think it raises their comfort level knowing that the policies today are protected against the rate stability regulation, that they're going to have fewer rate increases and smaller rate increases. So that peace of mind kind of opens the door for them to look at policies today.
Yeah. And, I'm going to post along with this video an article about how the rate stability regulations work and why this is happening fundamentally. But I really appreciate you sharing with us kind of your working with your clients,
Sure.
The real world with this and not just the theoretical world. So thanks for joining us, Ray.
Sure. My pleasure. Thank you. Appreciate it.